Hey, good morning, everybody. We've got a mixed to mostly higher trade in the grain markets here early on Thursday morning. I'm working from the road today. This is not live, but as of 6:10 a.m. Central Time, March corn futures down a quarter cent at 626 and a quarter. March soybeans are up 8.5 cents at 1448 and a half. March Chicago wheat is down 1 at 794. March Kansas City wheat down 1 and a quarter at 814 and a half. March spring wheat up 2.5 cents at 918 and three quarters. Got a lot of different estimates for US acreage emerging here as of late. Yesterday, well-followed private group IHS Markit was out with their estimates for this year's corn and soybean acreage. They've got U.S. corn acreage essentially at about 91.5 million, soybean acreage at about 87.8 million. The U.S. acreage situation, guys, is an extraordinary wild card. There are a range of estimates in regard to corn acreage this year from, say, 90 million on the low end up to 96 million on the high end. And there are well-respected, well-followed groups at both extremes. So the price implication, guys, the price implication of 90 million for corn is probably really friendly. If you only plant 90 million, you run into any sort of weather issue, real or imagined, that's extremely friendly to the corn market, in my opinion. If you plant 96 million acres of corn, that's a negative factor and could leave you with a market that's overpriced. If one of those extremes is realized, what does that mean for the soybean market? Because, a very high corn acreage number probably means a low soybean acreage number. So how do the spreads react to that? This is one of the biggest wild cards out there, guys. I know I've been spending a lot of time talking about South America and Russia and Ukraine. Those are the things that are moving the market short term. But I think that this acreage situation is supportive to these new crop markets, at the very least for the moment, just the uncertainty of it. So these estimates will continue to emerge. Of course, USDA releases its annual prospective plantings report at the end of March. The U.S. has rejected a Russian request to ban Ukraine from joining NATO. This is not any big news, but I'm going to continue to update you guys on the situation because I think it's really important. U.S. Secretary of State Anthony Blinken gave no concessions, but said he was offering Russia a serious diplomatic path forward should Russia choose it. Russian officials said that they would take time to analyze the situation. They won't rush into any assessments. So we've got to monitor the situation closely, guys. I've discussed at length here how Russia and Ukraine, that area is such a huge hub for wheat exports. Ukraine's become a big corn exporter. Any sort of disruption would be friendly to those markets. Any sort of resolution could be a little bit negative, the wheat market in particular. We had a big surge in U.S. ethanol stocks last week. Ethanol stocks were up 3.75% on the week to their highest level since May of 2020. Seasonally speaking, ethanol stocks, I believe, are the highest in at least 10 years. Ethanol production margins have declined. I talked about that earlier this week. We were, hugely into positive territory as recently as early December. And now production margins using spot prices of corn, ethanol and other inputs, they're about break even, maybe below break even. Ethanol production was off a little bit, 1.035 million barrels per day. That was down 1.7% on the week. It was up 11% versus the same week last year and about unchanged versus the same week in 2020. Ethanol margins around break even is not necessarily a terrible thing, guys. It happens a lot on and off historically, and we still grind corn for ethanol. So it's not a death sentence for ethanol by any means, but it's not a positive factor either. The Fed had its statement out following its January meeting yesterday. They are very likely to hike rates in March for the first time since 2018. So I didn't see anything really surprising here. This was one of the quotes from the statement. With inflation well above 2% and a strong labor market, the committee expects it will soon be appropriate to raise the target rate for the federal funds rate, or the target range for the federal funds rate. Fed Chair Jerome Powell said that the Fed's monthly asset purchases are likely to cease in March as well. The Fed has talked about this balance sheet runoff on and off. They haven't provided a time frame yet, but they essentially want to begin to unload this massive book of U.S. Treasuries and mortgage-backed securities that they've accumulated really over the last, since 2008, since the bank bailout. We've got an export sales report this morning at 7:30. Corn sales expected 600 to 1.2 million for the current marketing year. Soybean sales expected 500,000 to 1.3. Wheat sales expected 200,000 to 600. Cattle market was mostly higher yesterday. Feeder cattle mostly higher. There was some cash cattle trade, 136 to 138. Light volume. The boxes were down $2 or $3. In the outside markets, we've got the U.S. dollar sharply higher. Precious metals are off. The gold's off about $18 this morning. The S&P 500 is up 15 points ahead of the cash open. The Dow Jones is up 46. Guys, I'm off tomorrow. Have a wonderful weekend. I'll be back to the normal schedule on Monday.